There's so much money coming into the system. It's very difficult to get a recession with that size of a deficit. So the Fed is kind of in a pickle here, because the tailwinds lapping those year-over-year peaks of housing and rents from the summer of 2022. That's in the rearview mirror. So yeah, I think market expects only 2 rate cuts in 2024. That gets complicated by the election in November. So I'm guessing we have no cuts to interest rates. But I do not think it's going to have any negative impact on the economy. I think the risk of recession is quite low, and it's because aggregate incomes are going up, wages are going up, employment is full, and there's a lot of fiscal stimulus. So I don't think it matters. Fed funds does not matter. What does matter is the 10-year yield, and Yaman, you pointed out that it's 4.56%. If we get close to 5%, like we saw in October, there could be some pressure on asset markets. And the U.S. economy is very financially driven. The percentage of the value of assets within the economy is such a large percentage relative to national incomes that there's this pro-cyclical effect on the economy from asset values. So if the 10-year goes to 5%, I think that would pressure stock market values, and that could pressure downwards economic activity. But without the 10-year going up to 5%, I don't think there's any risk of recession.
You'd see. Thank you, Mike.
I was hoping Machine was still here. I had something to tell him. I want to tell him that, like his mom, CPI was hotter than expected today.
All right. In the meantime, thank you, Yutsi. Stay up here for a second. We have Meta in here too. I'm trying to get Machine back as well. We have YouTube Live now working. YouTube Live now working. You may head over there if you prefer that. Earlier, there were some issues with going live on YouTube. Mike, thank you very much for all that overview. Yutsi, what was your take on the data? Services CPI, X housing, X shelter had, a surge, really. And it's not just one item, although it is led by auto insurance rates, which obviously has implications for Tesla as well. And, you and I have a coffee bet that the 10-year yield will hit 5% before 3%. And you made that bet when it was about 4%. So now it's actually above 4.5%. So you're more likely to win that bet today than it appears I am. And so that would be wild for the markets, I think, and also for capital goods purchases, for housing, for cars. We already have auto days of supply rising above normal levels. Housing inventory is rising sooner than seasonally normal. And I think that could be bad for, yesterday, as, I explained to my value patrons that NFIB, Small Business Survey data, shows deteriorating hiring plans, almost actually clearly in the recession territory too. So small businesses are not doing too hot right now. What do you think, Yutsi?
Since it is Tesla space, I'm going to kind of tie this in with Tesla as well. The one thing that stuck out to me was the auto insurance side of things, and we saw from a regulatory filing, I think it was, that Tesla didn't necessarily generate much money on their insurance division, which is not necessarily a bad thing. They're using it to collect data, make the cars safer. There's a lot of positives from that, but I think we're maybe seeing in the last few months why the business was maybe struggling. Although Teslas are safe vehicles, they have all these active safety features and things like that. When they do eventually, or if they get in accidents with traditional ICE cars, I think the cost to repair those vehicles has gotten so expensive recently that that's what we've seen some of the surge in the insurance side of the business. So I think costs on insurance companies are kind of playing catch up, and that's why we're seeing the huge rise of premiums. So that was maybe the one thing that stuck out with me. I think everybody that has renewed their insurance in the last 6 months has kind of been a little sticker shocked.
Thank you. Meta, what do you think? Or would you like to talk about something else, which is totally fine. If you want to talk about FSD, or if you want to talk about the intersection of these inflation, interest rates, and orders for Tesla. Go
Yeah, I
ahead.
was actually curious about where you guys think the bottom is for Model 3 used car pricing, given macro effects.
I think that depends on the timeline for FSD getting really, really good. In my mind, that's the primary
Let,
factor
let's
here.
ignore
We don't
let's
really
ignore
know.
FSD for now.
I would say it depends on your view of macro. And although we have all these coffee bets, neither me nor Yaman has any idea what's going to happen. I feel like if there's a
Speak for yourself, sir.
excuse me,
Speak
sir.
for yourself.
If you believe that there's a recession coming, usually a recession leads to declining prices of all goods, not just vehicles. If you think about it, some of the insurance spikes that we're seeing should be, you would think would be late cycle things. So the cost of vehicles spiked, the cost of labor to repair those vehicles spiked, all that stuff has spiked a while ago, and now it's finally insurance companies are realizing that the premiums that they're charging drivers isn't enough to cover those increased costs. So there is an argument to be made that although insurance prices are going up, that's kind of a late cycle thing. So if you think that we're kind of towards the end of the inflation narrative, then I would think that Tesla vehicles are getting probably pretty close to bottoming out as far as the used vehicle side of things.
Isn't there a intrinsic value to just like the metal in the car at some point where like the cars maybe don't go below, like I think the batteries in the car alone are worth at least
And like 15,000 or 10,000, but yeah, I guess theoretically there is a floor.
I mean, Meta, you think people are going to be able to buy, $10,000 used Model 3s before FSD gets so good that it starts impacting, used values for Tesla?
I think even if FSD gets really, really good, the people who are buying a car for $10,000 or 15,000 or $20,000, they're probably really price sensitive, right?
Yeah, but I mean, I think the value of a really good driver where you can focus on other things, it doesn't nag you, gives back you an hour of your time a day, is worth more than $200 a month. Like I think a lot of people will choose that. People pay how much for Amazon Prime, you know, and yeah, we should probably look at that. I'm gonna look at that while you speaks.
If you look at used car gurus data, at least in the last 30 days or so, it does appear that Tesla's used car prices are kind of starting to bottom out, and Tesla's kind of taking the stance that it doesn't really look like they're going to cut new prices anymore. So I think there is a little bit of incentive that the prices are probably going to stay somewhat close to where they're
Well,
at.
we don't know if Tesla's gonna cut new prices or not. I mean, the data that Machine is talking about is pretty strong, first of all. And then secondly, 230 million people worldwide use Amazon Prime. And obviously it's a much lower payment for monthly. It's only $15, depending on your plan or whatever. But the thing is if people see the value, then they'll pay. If it saves you $100 plus $200 on your insurance payment, why wouldn't you sign up for FSD? Right? If Tesla perfects FSD and they can take on insurance risk as they drive you around, and it saves your insurance monthly payment $100 to $200 depending on whatever you're paying today, and it gives back an hour of your time a day, why would someone buy a freaking Toyota Corolla or Honda Civic when they can ride in a Model 3 and have the Model 3 drive them around? Meta and then UC.
So Amazon charges $200 a year. So it's not like
That's not that. Again, the point is more like if people see the value, they'll pay for something. Okay. And what are your thoughts on this saving on insurance payment?
I just want to make a point on the subscription price first, but we can switch if you want.
Okay, go ahead.
So I just looked it up. Like diapers, a diaper subscription costs you about $100 a month. So I do think it's mispriced at $200 a month because it's 10x the price of Amazon Prime. So it's not that it has to deliver value; it has to provide 10 times the value that Amazon Prime provides people, and twice the value that changing diapers for a child and having the diapers, well, obviously doesn't change the diapers for you, but having those diapers arrive on a subscription provides to people. So I think there is a value gap there. And no matter how good something is, if you're poor, you can't afford it, right? Like many people would probably love to be on a yacht. Doesn't matter how good of a value that is. You may not be able to afford it.
Yeah, maybe Optimus will change some diapers in the future. You'd see.
That's a good segue. Can I talk about my wife's experience with FSD this week?
Sure. But first of all, what do you think about the pricing of FSD? $199 a month.
Also,
Do
why
you
did
think?
diapers make you think that was a good segue?
Yeah, I don't know. I
My,
don't know.
my wife's pregnant. Also a good segue.
Oh, congratulations.
Yeah,
That's great.
congratulations. There was a big missing part there. I was like,
Yeah.
diapers, wife.
Well, no, okay. I'm just gonna go in. So, my wife has, and myself, I haven't. I've never experienced FSD beta, the newest stuff, until this week. I'd done like the old autopilot in 2016, 2017, when it first came out, and then I had a friend I'd drive maybe 2 years ago with like the original FSD beta, but I hadn't had a ride in it a long time, and so I rented a Model S because it had the newest 12.3.3, and I took my wife along with it, and I wanted to get her thoughts too because she's like, I don't know, just your average American person here in the Midwest. And we drove around on it for maybe an hour, and it probably had 4 or 5 disengagements, I'd say, over the course of maybe 45 minutes of driving or so. And at the end of the drive, she didn't know how much the vehicle cost. She didn't know how much FSD cost, any of that stuff. And I asked her, I was like, okay, you saw some of the benefits. We drove on the highway. It was great with lane keeping and automatic uh, lane changing and all that stuff. It saw the stoplights. So some of that stuff she was super impressed with, but some of the acceleration was a little bit jerky. Stoplights. So some of that stuff she was super impressed with, but some of the acceleration was a little bit jerky. There's a couple right turn on reds that was not necessarily a great smooth experience. And I asked her how much she'd pay for it, and she said she'd pay maybe a few $1,000s for it. And I was like, okay, what about like on a monthly basis? If you just subscribed like a subscription? She said, I don't know, maybe $30 or $40 a month.
Like premium subscriptions. Like I think the most expensive subscriptions out there are still TV packages in the hundreds, but I can't really think of many subscriptions that are $200 a month.
All right. So what do you think? Do you think they should drop it?
Yeah, I really do. Like I think there was a period in my life where I took Ubers all the time, and my monthly spend barely ever went over $300. So I think for the average family, $200 on effectively paying for taxis a month, it's raise the prices later as people like, Amazon started off at like what, $70 a month, and then they raise the prices over time. Tesla should do the same. Maybe when it is earning income, that's when you raise the prices, right? You could say you get this a certain amount of time, maybe you get a certain number of trips. They could put some kind of caps on there just to like prevent
Okay.
you from using it for profit.
Yep. All right. Earlier, we talked about Gallup data about intention to buy. I'm not going to cover that. I think we did a pretty good job there. We had a number of people from younger demographics come up and speak about their experiences, what they're hearing from their friends, networks. You're welcome to listen to that section, either on YouTube. You can go back actually now while we're live or later. We have Mike and Yutzi on the call on the speaker board. So maybe we should focus a little bit. I mean, it is a big macro day today. These price actions are driven very much by macro today. Tesla down 3.2%, PE ratio of 39.8, market cap is $537 billion. Nvidia stock was down quite a bit in the morning, but now it's up 1.8%. SMCI, Supermicro, is also break even. I think these chip stocks have peaked and they're going to go down from here on out. But Meta, as a Tesla investor, are you concerned that the Fed may not cut until September or November?
Yeah, it's starting to seem possible. I think as a Tesla investor, if inflation is driven by oil prices, it's not as big of a concern. But if inflation stays stagnant and it's not due to oil, it's due to everything else, I think it's a different story.
Yeah, oil prices have risen a little bit, but they're not at levels where they're going to make headlines, like all-time highs kind of headlines, But these inflation numbers are driven mostly by services X shelter. So the market is starting to believe maybe it's a little more stickier than we originally thought. And the Reuters headline today is Wall Street slides as inflation stalls, rate cut hopes wane. And the yield curve is up 20, 25 basis points in the section of the curve that matters to Tesla investors, 5 to 10-year treasury yield. Those are the rates, obviously, that impact all the loan rates. This also kind of calls, just a warning to people asking for Tesla to offer subvented interest rates to drive orders in the shorter term. Had Tesla done that in the last year or two to a great extent, as others have, like Ford, GM, etc., they would be in a worse position today because these interest rates are proven to be higher for longer. So whichever automaker offered those lower subvented 0%, 1%, 2% loan rates to potential buyers are going to have to pay the difference between those loan rates and the market rate, which is 10% for longer than they may have originally thought. So that's a big risk for their balance sheets, income statements, etc. And maybe Mike can talk to that a little bit. Mike, where do you stand on Tesla offering? People are calling for Tesla to offer lower loan rates. Where do you think? Where do you stand on that issue?
No opinion, Yaman.
Interesting. Sounds like you're busy. Meta, what do you think?
I don't really understand this and how it affects or how it all connects together, so I'm going to opt out. Could I ask a question instead?
Sure.
If nothing changes, does inflation naturally regress, or do you think we just stay where we are? Because it feels like the Fed's adjusting of the interest rates is not having the desired effect in the timeline they want. So do they do they have to ratchet up the interest rate, or could they just wait?
They would have to up the interest rate. If inflation turns upward, if inflation rates turn upward, and then people start worrying about a wage price spiral. So I saw a couple of folks that I follow via Macroanalyst account talk about a wage price spiral again. So if that happens, then maybe Larry Summers might be right that the next action might be a hike. It's unlikely. It's definitely not being priced in the stock market, but just the fact that we're hearing a bit more rumble around wage price spiral when we thought it was behind us is a little concerning. Yeah. Yeah. But on the other hand, another account I follow through Macroanalyst, his name is Peter Berezin, who is the Chief Global Strategist and Director of Research at BCA Research, okay, independent research firm, formerly with Goldman Sachs and IMF. He says, contrarian take, I'll pin this at the top. Actually, never mind. Contrarian take, the current inflation scare will fizzle out because unlike 2021, wage growth is falling. There can't be a wage price spiral unless wages are spiraling. Here at the top of the screens. Okay, it has a graph as well from BCA Research. It shows a 3-month moving average of median wage growth, hourly data, unweighted series. Okay, shown advanced by 8 months and as a 3-month moving average. Source is Indeed, so this is Indeed data. So according to Indeed data, Peter Berezin is assuming that Indeed data will, so those are posted wages, will precede wage growth by 8 months. Okay, I'm not sure what kind of research he has to support that claim. He's only showing 5 years of data, so that's clearly not enough to conclude that there's any sort of a relationship. But it does kind of make sense on the surface that the posted wages, just like asking prices for houses or cars, I guess these are asking prices for labor, would precede actual. And that is showing wage disinflation continuing throughout the year. So Peter's concluding that he does not see a wage price spiral. Meta?
So I get the concept of a wage price spiral, but conceptually, have we ever seen this in history in the United States?
Yeah, in the 70s, right?
Okay, and how long did that last?
Well, the up and down period was, Mike would know this better, but, about a decade. And then they had to jack up the interest rates by a lot.
Got it.
But
Okay.
Mike, do you expect that to happen?
No, very different today. Back in the 70s through the early 80s, inflation was a result of, for the most part, excess deficit spending. Similar to today, interest rates are really complicated. Short-term interest rates are very complicated. On one hand, higher overnight rates actually increases the money supply, increases national income. If you have savings, those savings return a higher yield. Okay, so that's inflationary. Higher interest rates are actually inflationary as it relates to increased national income on savings. The savings is the Think of it as an absolute amount of wealth that's increasing the money supply. That's inflationary. So it's more complicated than it appears. If you have inflation increase the cost of capital, which then pressures the yield curve, which makes longer term interest rates higher due to the opportunity cost of short term interest rates being higher. It's not that simple, especially today where we have massive deficits. The same thing happened in the late 70s and early 1980s. Fed funds overnight rates were as high as 18%, and inflation was still a problem, and it was because of the massive fiscal deficits. And that's, in my opinion, my strong opinion, inflation today is a result of these massive deficits. And it's not going to be cured by increasing the cost of capital overnight, riskless cost of capital, as proxied by Fed funds. Only to the extent that you bring them high enough such that it brings out sellers in the long end of the curve, forcing up long-term interest rates. Long-term interest rates are really the interest rates that impact the real economy through mortgage financing, automobile financing, durable goods financing, is about long-term interest rates.
Right. What I really love about YouTube Live is that people are having conversations about FSD over there while we talk about macro. So there are two different conversations going on. Omar, do you have anything to add to what Mike said, I said, Meta said about interest rates, inflation, potential wage price spiral, or Peter's data showing Indeed data predicting wage disinflation for the rest of the year?
Well, I think that I'm not sure if we're going to see a wage price spiral. I think the economy is still a little bit weak, but the rise in fuel prices is a little bit concerning. We're not seeing CPI come down, but at the same time, people's expectations keep moving back and forth all the time. First, we thought that we're in some hyperinflation scenario. Then we said, oh, there's no hyperinflation. It's actually a soft landing. Then we said, okay, maybe it's not such a soft landing. CPI is coming down, not as much as we thought. Who knows what we're going to think tomorrow? I don't know. I think overall, things will be okay. It is going to take a while to get down to the 2% target. But the Fed has also said that they don't need to see it hit 2%. They just need to see sustained progress. Now, if it's going in the other direction, that's obviously not sustained progress. So it's looking like the rate cuts that we were expecting and hoping for and desperately needing for Tesla as a business are going to be pushed out. So that's going to make the operating environment more challenging. And again, who knows what happens tomorrow? Maybe, something happens and there's sort of massive deflation, but it seems like it's just going to be a little bit of a struggle getting down from 3 point something to 2 point something.
Thank you. Man, today's space is a downer. What is going on here? And FUD is not even on the speaker board. How could we clear this up? Well, I mean, I think we should also mention I think there's an asterisk for Tesla stock specifically. I think the other automakers are going to really hurt from rates staying higher for longer. Okay. But Tesla has a couple of things that are going right for Tesla investors. A lot of people are focused on FSD 12. I personally don't expect FSD 12 to impact Tesla's financial statements materially until 2025, 2026. But this year, we have Tesla Energy, growing. Tesla's Lathrop factory is ramping. We've all seen megapacks coming out at a faster rate, accumulating in the lots over there. That doesn't necessarily mean they're installing newer lines or anything like that, but at a minimum, Tesla Energy is progressing on ramping its first production line and potentially optimizing it. So when the financial statements come out in a couple of weeks, in a few days here, I think that we're going to see a higher gross margin for Tesla Energy. And I don't think you need much operating expenses to install these things, sell these things. There's not much R&D going on. So that increased gross profit should drop down to operating profit and then down to the net income. So Tesla, unlike GM, Ford, BMW, Mercedes, Toyota, etc., has this aspect of Tesla Energy that I think will kind of carry Tesla stock through a potential downturn. Omar, what do you think about that?
Well, I hope so.
All right.
I mean, like my perspective as an investor is kind of like we have sort of a secular technology trend here with AI and with EVs to a lesser extent. Less secular in that it does seem to be getting impacted a little bit by the economy. But, there's always going to be something bad happening in the world. There's always going to be a headwind here or there. But, I mean, this is really, obviously, I think, a turning point in the business. They're kind of turning a corner. I think they're overtaking Waymo. Things may get more challenging from here, but I think what they have is just huge and transcends what's happening in the economy.
Okay. Okay. Meta, what do you think about that? Tesla Energy.
I mean, I think right now there's a lot of positives in the fundamentals, but the macros are kind of driving the market right now. So I don't think no matter how good Tesla Energy or Optimus or other things, even FSD are doing, I'm not sure if those alone will change the narrative for Tesla. But of course, with Nvidia and other stocks, it has worked. I'm personally not convinced that Tesla gets away from the macro story right now. Maybe I'm just in a depressed mood.
You guys are all depressed today. You're bringing me down.
I'm not
Let,
surprised.
let
I
me
mean,
ask. Let me ask.
12.4 is rolling out to employees. That's pretty exciting.
12.3 I made the same mistake. 12.3.4. But before we switch to FSD, Meta, what do you think will be the lowest the stock? No, you're not. Is machine here? Let's see. Mike is also M. No, he's not here today. He's not here right now. What do you guys think the lowest price that the stock price sees this year?
Probably what we already saw, 105.
Omar, what do you think? Would you like to put in a prediction, or Mike? We didn't
mean,
see
I have no
105 today. What are you
idea.
talking about? That Bradford is. Maybe he can tell us about it. But the lowest that we saw in 2024 is 162. The
I think we
105 you're
got to like
referring.
113 last year, maybe. But I don't know what the stock price is going to be. Nobody can
Yeah, that was
predict the
end of
future.
22. That was end of 2022. We got close to 100. But in the last year, the lowest that we've seen is what we just saw is 163, 162. People forget time flies, guys. Time flies. That was end of 2022. This space has been going on for nearly 2 years now. How do you feel about that?
I feel like this space ends at times, so I don't know if it's been going on for 2 years straight.
So you think Meta, we've seen the bottom in the stock, 162? Meta, catch your
Oh,
tongue.
I talked the whole time while I was on mute.
Mhm.
I have to run here in a second, but I think 130, 140 is certainly possible. I'm not expecting that or hoping for that, but I think people should definitely be prepared for the worst case. Don't like over leverage or anything.
Okay. He says 130 to 140. All right. Before you go, any takes on FSD 12.3.4? There's a lot of rhetoric out there, Meta, that this cadence of new releases translates to a faster pace of progress. What would you like to say to those people?
I mean, it's possible. The only thing we have to see is how many steps back, right? That's the really important piece. It's okay if there's some regressions here and there. And I do want to caution against using subjective data sets. I did tell Elias, like, hey, I'd like to see the 90th percentile, 50th percentile, and 10th percentile, because there is a huge deviation between what people are experiencing, right? So if the 90th percentiles are not regressing, that's a good sign. If the, you know, 10th to 50th percentiles are regressing, that's okay. That's not what they're targeting right now. They're trying to make the experience for some perfect, I would imagine, while everybody else is getting pulled up. That's not the main goal. It doesn't make sense to go after the edge case that's, happening super infrequently and guarding against that while you're trying to tackle the most common edge cases first. But, some people are going to get really excited that their edge case got handled, and then the edge cases are going to regress, but their edge case might be really frequent for them, but infrequent for the fleet.
Yeah, good point. That's good feedback for Elias too.
Yeah, like averages lose a lot of information. You got to look at percentiles
Mhm.
or standard deviation.
Have you spent much time in that tracker where you kind of see the other screens? We're talking like more than 100 screens on that tracker. People just look at that one figure and leave.
No,
But there's a
I've
lot
looked
of data.
around. I've looked around, and that's why I mentioned to him the particular feedback I gave. The main problem I have is if we try to find a way, the main criticism is always people are having subjective experiences that differ with the tracker. And the best way to deal with that kind of that kind of differentiation in experience, in my opinion, is to let the data show that rather than try to hide that.
Okay, good. Any other? Oh, you're leaving. Okay.
Yeah, I gotta go.
Okay. If Bradford wants to come up and maybe chat about the near term of the stock price or Q1 earnings, Tesla Energy, his FSD take is welcome to come up. Any other questions for Omar or Mike? Please request to speak. Mike, do you have a prediction on how far the stock price declines this year?
Wow. I'm surprised that it has held up so well with the bad deliveries and kind of the fixed cost, variable cost deleverage that I think we're going to see in the first quarter numbers. I'm guessing they're going to be negative on a GAAP basis. I don't care personally. I'm a long-term investor. I actually would welcome a cheaper stock price to buy more shares. I think everything about Tesla's future is AI and FSD. The best expression of real world AI, moving people and things around the planet, is tens of trillions of dollars of economic value. That's my focus. I think in the short term, you know, I'll analogize with Bitcoin. Bitcoin has a market capitalization today of about $1.35 trillion. And generally, Bitcoin is not used for the purchase of goods and services, certainly not in developed markets. To a greater extent, it's used in emerging markets. But most of the value, well, almost all of the value of Bitcoin is finite supply and a very preferable storehold of value. Tesla, when it comes to AI, I think there's a lot of investors around the world that see Tesla's opportunity in real world AI. And regardless of the short term financial impact of a downturn in deliveries and that fixed cost, variable cost deleverage that could impact financial results, I think investors really are seeing Tesla in its AI opportunity, and that's why the stock hasn't gone down. I thought it was going to go down dramatically based on deliveries and forecasts for negative earnings in the first quarter. Just trying to understand why it hasn't, and maybe that's the explanation.
Thank you, Mike. I'm trying to get James Cat in here too. Matt Smith is now on the speaker board. If Bradford also would like to come up, he's welcome. Anyone else who takes a deep dive look at forecasting to quarterly financials, you're welcome to come up to speaker board and we can have a good discussion. Matt, welcome. How are you?
Hey, I'm good. Thanks, Yaman. How are you?
I'm good. So James Cat a couple of days ago put out and said maybe Tesla will have a negative free cash flow in Q1. I personally think that's a given. And Mike just mentioned that he believes that Tesla will have a negative GAAP earnings as well. And I think that's possible. Where do you stand on both of those?
Yeah, so I'll take what I view as the easier one first, and that is the GAAP earnings being negative. I think there's very low likelihood of that. They'd have to have some pretty significant destruction in margins for that to happen. Where Wall Street's coming in is actually pretty close to where I am. I'm in the roughly 49-50 cent sort of range on earnings per share. So to get to the level where they'd actually have a GAAP loss, there'd either have to be some kind of one-time item, which everyone would shrug off, or like a catastrophically bad margin, which I just don't see. I do assume their margins are going to decrease. The way that I do it is kind of by looking at their what I call their core manufacturing margin. So if you back out FSD sales and credit, and you got to make an estimate on FSD, so it's an imperfect science. But if you do that to try to back into how profitable their core manufacturing is, I assumed a 200 basis point reduction quarter over quarter, and was still getting 50 cents ish in earnings per share, adjusted earnings per share. So GAAP earnings per share is like low 40s. So to get to the point where that would get completely eroded, you'd have to have it'd be extremely bad. So I think it's highly unlikely that we're going to have like a GAAP loss. On the cash flow side, when I was doing my modeling, I was coming up with roughly cash flow neutral. But I would take that with a grain of salt, because when I was first doing this, I was assuming that there was no significant uptick in CapEx. But I think with the compute increases that we've seen, the more I'm thinking about it, the more I think it's actually somewhat likely that they're going to have a spike in CapEx this quarter related to all the GPUs from NVIDIA that they've been buying. So that's kind of where I am at a high level on both of those two items, and happy to kind of go into it more in specifics if anyone's interested.
Yeah, we are very interested. Thank you very much for sharing. Any questions for Matt? Please request to speak. Matt, what is the gross margin you're assuming for automotive for Q1?
So I have to pull it up here for a second. So
while you do that, so the thing that concerns me is what Mike mentioned earlier, which is fixed cost deleveraging. Obviously, delivery dropped quite a bit from Q4 to Q1. A large gap between production and deliveries, and so I think that maybe gross margin may drop a little bit more than people expect, generally speaking.
Yeah, I that's definitely at play here. That's in fact the main reason for the margin to contract. So I'm at 18.1%, which if you look at it sequentially, it doesn't look like it's super conservative. But that's why I think it's actually really important to back out the credits and the full self-driving, because my estimate of those items in Q4 was around $1 billion. And so I'm assuming that that's roughly the same in Q1. And so then your actual kind of automotive, like what I was calling your core manufacturing gross margin, decreases by about $1 billion. But when all that math kind of shakes out, you're getting an 18.1% gross margin. So if I were to assume like a much more catastrophic core manufacturing margin, like bringing it down 400 basis points rather than 200 basis points, let me just run that through right now. So then I'm getting a 16% automotive gross margin, and then adjusted earnings per share still 35 cents. So I'm just finding it very hard to get to the level where it's actually like catastrophic, as I've heard some of the people getting there describing. It's possible, I suppose, but I'd have to be off on some other stuff.
Mike, what do you think? Thank you, Matt. Mike, are you there?
Sorry, Yaman. I haven't modeled anything, just my experience with manufacturing companies when
Matt, can you hear Mike?
No, it sounded like he just cut off in the middle of his sentence.
Yeah. Okay. Matt, can you say the specific numbers again for the sensitivity analysis that you just presented? If the margin drops to what level you say you still don't see it?
Yeah. Okay. So the my base case scenario is that your what I was this is a non-reported metric, but it's one that I've been using for years to do my own modeling, and I found it's reasonably accurate. The core manufacturing gross margin. So if you essentially back out your FSD and your credit sales, and you have to make an estimate of those. But then you back that out to get to what's your gross margin just on the vehicles that you've sold, just the hardware. So in Q4, when I was doing that estimate, I was coming up with 14.3%. And then when you add in all the other stuff, what gets reported is 18.9%. So if I drop that core manufacturing gross margin by 2% to 12.3%, then I'm getting an overall automotive gross margin.
Okay, so let me ask you this. Mm-hmm. How did you come up with that 2% figure?
So it's an estimate, because you like I've done extremely detailed modeling on a plant by plant and vehicle by vehicle basis. When I have done that in the past, I've actually found my model to be less accurate than when I make an estimate based on some of the qualitative things that we know are going on in the quarter. So qualitatively, we know this quarter, like the fixed cost absorption is going to be very bad, just for example. So you're just trying to weigh all the different items going on, like, what's the mix of vehicles, if there are a lot of S and X, kind of make an estimate of that, where their price decreases, things like that, to try to hone in on what has changed quarter over quarter.
Okay, so you and I both agree, and I think Mike agrees. Mike is having connection issues, so he had to drop off. But that fixed cost absorption is going to be bad. What about the discounting on the new inventory page? So this quarter in Q1, it started out a little earlier than usual. What do you think about that?
Yeah, so it's just so hard to isolate any one of these items and identify how big of a deal that might be quarter over quarter. I agree with you. It sounds like there was probably a little bit more discounting, but it's just one of those things that it's very hard to put a number on. Okay, how much of an impact is that actually going to have? I was a little bit, when I was forecasting Q4, I was very concerned about the discounting, so I was coming up with earnings per share a fair amount lower than where they actually ended up. So, I'm hopeful that it won't be as bad as I was thinking it was in Q4. But there's really, because of the lack of detail around all these different variables that go into it, you just have to kind of make an educated guess on how it all shakes out together.
Okay, Mike.
Yeah, Matt, congratulations for doing the modeling. It's too time consuming for me, frankly. It's a wild guess that I'm making. I've got a lot of experience with manufacturing companies. When there's declining deliveries, it is an exponential deleverage in the fixed costs. I remember on the fourth quarter earnings call, there's going to be a step up in January of wages across 200,000 Tesla employees on the manufacturing side of the business. Which I think is going to be a pretty big impact on operating expenses. So yeah, just a wild guess on my part, but I hope you're right.
Yeah, and I would say, I mean, what we saw the benefit of like better fixed cost absorption when Shanghai ramped up a couple of years ago. So like it's a very real thing, but trying to guess the magnitude of it is what's important. And I guess the thing that gives me a little bit more comfort that this isn't going to be some catastrophic bad news that's going to send the stock down to like 100 is even if I am modeling like much more drastic reductions to the point where I think it's highly unlikely that they would get that low, we're still in positive, GAAP earnings per share territory.
Yeah, that would be great. I'll just say one more thing, Yaman. I don't think it matters as in terms of the stock price reaction. I think everything is going to come down to the earnings call and the relative optimism regarding robotaxi and FSD. I think the entire call is going to be focused on FSD, as it should be, giving color as to the path, the progress, the architecture changes, and how that allows for quicker iteration. So I think everyone's focus is going to be on the earnings call, not on first quarter earnings.
Yeah, I mean, I agree with you, Mike, that FSD is very important. Optimus, I think, is going to comprise majority of the intrinsic value for the company in the coming decades. But at the same time, obviously, Wall Street analysts are very much focused on the last quarter, the next quarter. And I mean, unless you believe FSD will dramatically impact the bottom line in the coming months, I just don't. I wouldn't jump to the conclusion that everyone is going to care about FSD only and not about margins. And last night I was on a macro-related space, and you kind of obviously Elon comes up, Tesla comes up, and somebody said verbatim, none of Elon's companies are profitable. They're all focused, or they're all benefit from government subsidies. That's the only reason why they have a positive line. And we know for a fact that's not correct. We know for a fact that's a false statement. And not a single person corrected that speaker. And so, if the bottom line of Q1 is negative, then, I think that would have some impact. But Omar, what do you think?
Well, I would love if everybody just focused on FSD all the time, but obviously they're going to be looking at the earnings. They're going to be looking at what the forecast is for the year. I mean, if they reported a net income loss, you wouldn't hear the ends of it. Jim Chanos would take out one of those planes that writes in the sky, Tesla posted a loss. The Bears would never shut up about it. They are just salivating, waiting for these financial results. So I hope they've got something up their sleeve, but it could get ugly.
Matt, what do you think? What do you think will be the kind of average market participant will be focused on, let's say, in the earnings release and then in the subsequent earnings call?
Yeah, so I didn't hear the first part of what Yaman said. I had issues with spaces. I couldn't hear, or sorry, with what Omar said. So I didn't hear exactly the whole context. But like, I think for your average kind of like what's going to move the stock in the short term, it's probably going to be anything to do with outlook on like deliveries. I think what has the market so spooked right now is deliveries were down year over year, down like significantly. And so is there a risk that Q2 deliveries are down again, and maybe we even have like a decrease in deliveries in 2024 relative to 2023? That's, I think, the big fear on like your average kind of investors and probably Wall Street's mind right now is like, what level of certainty do we have that like 2024 isn't going to be just a total shit show? Um, so I don't think they'll be able to give much insight in this. I mean, the one time that they really did try to give some confidence around that was, I think it was last year in the Q1 call. Actually, Zach Kirkhorn gave some guidance on, even though they had these big price cuts, I think he gave some strong guidance on what they were modeling for earnings for the rest of the year, and they immediately missed on that. So I think there's just, because you can order a car today and get it delivered in a week, like Tesla doesn't even know what the outlook for this year is going to be. So it's very hard for them to give any sort of guidance that's going to be reassuring. So absent that, what I think is like the only wild card that could maybe move the stock a little bit, and I think it's unlikely that they'd share anything on this front, but if they did, it'd be very interesting, is they shared any sort of metrics around how successful the like FSD test drives for like new deliveries has been, and or anything that they can share around subscriptions after the FSD demo went out. I think it's probably going to be too early to have any meaningful results from that. But if there was some sort of statistic like, we gave FSD beta test drives to 100,000 people at the end of the quarter or something like that, and 20% of them signed up for a subscription. Like something like that would be like very impactful in that it would force analysts to start to model in like higher take rates. But I just don't think that's likely, but something that could be a wild card on the positive direction.
What about Tesla Energy? Tesla Energy, I think, has they obviously have higher gross margin than Tesla Automotive, and if you expect Tesla Automotive margin to drop even further, and Tesla Energy later factory is continuing to ramp, and maybe they had a couple of quarters now to smooth out production a little bit, do you think that would be a good positive surprise?
So it could be, but we already know the units or the gigawatt hours deployed in Q1, and it was a good number, but it was just 2% higher than it was in Q3. So as long as there's not any kind of crazy surprise, I think your earnings from megapacks are going to be roughly slightly higher, is the way that I'm modeling it, from where it was in Q3 2023. So I mean, it's becoming a more important story. When I'm doing just some quick math here, I'm showing that like the energy gross profit is going to be about, let me see here, like 12.5% of the total gross profit for Tesla. So it's becoming the sort of thing that analysts can't ignore anymore. But it's also not the sort of thing that's going to offset any losses they might have from further price cuts or lower delivery forecasts, anything like that. So eventually, when they ramp up to the full 40 gigawatt hours at Lathrop, and the mega factory Shanghai rolls on, like of course that's going to be very meaningful. But I think those are in the 2025 plus, I think, territory as to when it's going to be a financial impact. I mean,
Okay.
energy just in general, like there's such a lag with when they like start ramping up to when the revenue and margins are actually recognized. It's very laggy compared to automotive.
Okay, great. And then I actually want to, obviously you focus a lot on Tesla Energy with your experience as well. Is Tesla Energy growth being held back by interconnect backlog?
So you could say that it is, to the extent that it is like the interconnection being finalized is one of the preconditions for recognizing one of the final tranches of revenue. So if you've got some project and you want a megapack to be part of your solar and storage site, the way that the accounting for it works is you might sign a contract with Tesla, you make a little down payment, but that doesn't become revenue until like maybe Tesla actually builds it. Then they might recognize a chunk of the revenue, a chunk more when it's delivered, a chunk more when it's kind of energized and they can do some testing. And the final chunk that can be recognized isn't going to be until the interconnection is operational and the project is commercial. And that whole process from maybe when the Megapack is first produced to when the interconnect is signed and you can recognize that final tranche of revenue, that could be 18 months, in some cases, maybe even longer. So if the delay in interconnect is maybe delaying some of the recognition of the revenue, but I think the much more important thing for Tesla investors is like the delay in interconnect is like making it extremely valuable to have more megapacks. Like the demand for megapacks is still gigantic because the grid issues are frankly a lot worse than almost anybody was expecting. The intermittency, the volatility of pricing, and just the role and the economic value that batteries can provide is very strong. So I think that the bigger thing limiting the growth of energy is just ramping up production. And I don't know why it's taking so long to ramp up Lathrop.
Okay, thank you. And now we have a dedicated bear in this space. Tesla FUD News is an actual bear who bets against the company. And previously he was a bull. And we had a big Tesla bull bear debate the other day. And since that debate went well, we've had more bears come into the space. And we're working together to kind of get to the facts, get down to the facts. And he has a question for you, I think. FUD, go ahead.
Yeah, I was thinking about energy specifically because I know that they did have these high ASPs in the past, and the price of one of these megapacks was 2.4 million. But I believe the current price is 2 million, which is down 23%. So combined with higher wages in Fremont, do you see that gross margins for energy might actually come down in this case?
So I don't think so. I think the best way to look at it is on a dollar per kilowatt hour basis. So I haven't checked it in the last say month, but last I checked, the dollar per kilowatt hour of a megapack was still in the quite healthy, $450 or so range. I also saw today somewhere on Twitter that there was confirmation that they're actually using LFP in megapacks for the first time. So that's going to go a long way toward lowering costs overall. So like if the pricing goes down, of course that'll hurt margins. But I just haven't seen.
Wasn't Lathrop always LFP and Giga Nevada was the nickel battery?
Yeah, I think that's accurate.
Yeah, I mean, also FUD, the higher wages of Fremont or the California higher wages of Lathrop has always been there, right? The only thing that's really changing from previous quarters is that production has ramped a little bit more. The mega factory, has had more experience producing, and the supply chain has had a little bit more experience. The logistics a little bit more experience. And also, lithium prices have come down substantially. So, I don't see Tesla Energy margins going down from here. If anything, I think they'll go higher. The question is, how much higher? Matt, where do you think Tesla Energy margins will be throughout the coming quarters? Gross margin.
Yeah, so just to follow up, I just did a very quick check based on pricing on their website, and the number I was coming up with was $438 per kilowatt hour. So certainly very healthy. And I wouldn't expect there to be any sort of margin pressure on that, especially based on the kind of backlog. Earliest you can get one delivered right now is Q1 of 2025. So they would only be lowering prices if there was a demand problem, and it doesn't seem to me that there's any kind of credible source to believe that there's a demand problem. We already know that the overall energy gross margins are in the 25% range. I think it was 24.4% in Q3. It was 22% in Q4. But keep in mind that Q4 stationary storage margins were down. So the real kind of money is on the margins on the stationary storage side. The solar side is a lot less profitable. So to the extent you've got more stationary storage being deployed, which we do have in Q1, that's going to help margins. So I'm modeling 25% kind of going forward. I think that's reasonable. They're essentially already there, and I don't think there's much reason to believe that they should be going down from where they already are, essentially.
Bud,
I believe that
any questions for Fudd or Matt Smith? Please request to speak. We have half hour to go. Half hour to go. Any questions for Matt? Please request.
Yeah, I believe that they did like cut megapacks slightly. It was just 10,000, so half a percentage point. But I do find it hard to believe that I guess like Q2 and going forward it would be higher. It might like stabilize depending on this. But you did make the claim that if demand wasn't good, they would have to cut. Although this is not a big cut, so I'm not going to make any conclusion about this. But this is a sign that maybe it might be not as strong as they expected, or maybe this small price cut is just a way to make headlines and maybe bring more attention to this.
Well, so the other possibility is they do have a mechanism for passing through some of the lithium prices to their end customers. So it's possible just that as lithium prices have come down, the base price that they're listing has come down, but it's kind of a net neutral, because if they had retained the higher base price, they would have just ended up crediting more of that on the ultimate sale price due to the lithium price pass through. So to me, that seems like a more reasonable explanation than kind of anything we can extrapolate on supply and demand.
Okay. No hands mode, guys. No hands mode.
Do they buy this lithium, or do they just buy the batteries? Because if they don't buy the lithium, then it's technically going to be Panasonic or whoever that makes it that is going to be able to just pass them lower battery prices. So I'm curious about which factor is it in terms of the lower pricing in order to lower COGS?
So the majority of these are coming from CATL, and so I don't have specifics. I mean, those are private contracts, but what I've heard is that Tesla does pass on those costs to the end customer, and I can't imagine they would do that if there wasn't a very similar arrangement with CATL, because I mean, they're both CATL and Tesla are intermediaries between the ultimate buyer and the lithium miner. So I think it's reasonable to assume that both CATL and Tesla would just be passing on the cost from one to another up to the final buyer.
All right. Any other questions for Fed? Matt or Fudd? Please request to speak. Matt, anything else on your radar for the coming weeks and months other than Q1 financials? We talked a little bit about FSD. We talked to ad nauseum about FSD in the space, and while I have you, I kind of want to focus on Tesla Energy, because I don't think we covered that as much as we should.
Yeah, I mean, FSD is honestly what I'm super excited about right now. But I mean, on the energy side, it is. I think it's just going to be a slow burn. Like I've looked at Wall Street analysts' forecast for, I don't know, like say 2026, and they're basically just not assuming that energy grows to the like 100 gigawatt hour or more capacity by that time. And that's just kind of a crazy assumption in my mind. Now, I have been kind of disappointed that like the Gigafactory Nevada expansion, which is supposed to be 100 gigawatt hours of additional capacity, that doesn't seem to be really moving very quickly. So that's a little bit frustrating. But I think most of those were going to be dedicated to robotaxi, or not to robotaxi, sorry, to automotive. But Elon did say at that event that a portion of the 4680 cells being produced there would go into megapacks and stationary storage. So that was a really interesting item that caught my mind, because whenever they do ramp that Nevada plant to full capacity, there's going to be, I think it was about $4.9 billion of tax credits that Tesla would be eligible for every single year, just on the $49 per kilowatt hour credit on those incremental 4680 cells. So I'm looking forward to that ramping up again, but that seems to be going a little bit slow. That's kind of the story of energy in general. Is just it's gone slower than I think we might have thought.
Well, you've always been very conservative when it comes to forecasting Tesla energy, whether it's revenue growth or margins. So I would say you've been spot on when it comes to this stuff.
Well, so I mean, there were some people like 2 or 3 years ago who were basically saying like it's going to grow at 100% per year and at better margins, and then like by 2030 it'll be more than Tesla automotive, and like I would say my main forecast was just saying like no, that's wildly optimistic. That's not going to happen. But I think my own forecasts have even been too aggressive compared to what we've actually seen. So there were just a couple of years where energy was basically in the doldrums, where solar has basically died, which I was not forecasting. I do hope they get the solar roof figured out at some point, because I think that's a great product, but it's just they can't figure out how to do it profitably right now, which is a bummer. But yeah, solar has really not gone anywhere, and then stationary storage has just been very slow. But it was because they were cell constrained for a long time, and now they're not. But now we just have to kind of reaccelerate that growth. So we lost a couple of years, I think, of growth potential on that side of the business. But we're definitely starting to ramp up right now. And if you look at what's going on in the energy space, it's hard not to get excited as long as you have a long-term view, because it's not going to be the savior of earnings per share in 2024.
All right. We have about 20 minutes to go. We have 2 new speakers on the board. If you have any questions for Matt or any of the other speakers, or Omar's here as well, please request to speak. Let's go to Eli Burton. Eli, go ahead.
Hey guys, yeah, I just saw Omar's joined, and I was coming in to join the conversation on the stock for this year.
All right, great. Well, I think Omar might be having some connection issues, but while we wait for him to come back, if he does, Grant, go ahead.
Hey, honestly, didn't have much to say. Was just kind of listening in, but happy to be here.
Okay. Grant is another bear in the space that is actually betting against the company. So we have 2 bulls, 2 bears on the board right now. Interesting.
And betting against Tesla is a dangerous proposition, especially at this market cap, I think.
Well, shots fired.
I'll respond to it. I mean, that's an interesting comment, because I almost feel the opposite. I mean, it's a lot harder for a business to 10x from $500 billion than where it was in 2019, 2020. I mean, I kind of feel like the upside is capped. I know you guys don't think that, but that's just my perspective.
Well, I'm actually going to agree with you. I think way too many people think how easy the next 10x is absurd, because the law of large numbers are such that very quickly we end up reaching the wealth of all of human history. However, I do think a 2x is far more likely than a 50% drop.
Yeah, and I've got a question on that, because the difficulty of a 10x has nothing to do, in my mind, with how probable you think it is that we go down from here. So aside from not believing in the bull case, why are you on the bull side, or sorry, on the bear side?
Yeah, I think that the current situation, which is kind of characterized in my mind by a stale model lineup, price cuts, EPS just kind of getting eviscerated, all the above, has been somewhat predictable. I mean, I've been around the stock for a couple of years, and going back 2 years, I think I was telling some of the bulls who had these forecasts, like 30% gross margins are going to be tough. That's not an easy thing to accomplish in the auto space. I've been a cynic when it comes to a lot of the commitments and promises that Elon's made around full self-driving as well. I'm definitely curious to see what the robo-taxi represents. I definitely give V12 credit for being a big step ahead, and there's likely some value to be captured just from a really good ADAS. But yeah, I don't know. I mean, I'd be curious for your take on the stock. In my mind, the stock today is the value of the stock today is a function of a few things. It's what is the energy business worth, which I don't know, $50 billion, $100 billion, whatever you want to say. It's what is the value of a quasi-distressed automaker, which, look at the EPS, look at the trends, look at the challenges for the core auto business. I think it's pretty bad. What's the value of the ADAS, which I think is going to, they're doing the trials. I think that that's going to have some throughput. That is definitely a hopeful thing for the auto business. They're both kind of linked. And then what are the value values of Elon's promises concerning robotaxis, Tesla Bot, Dojo, pick any number of them, that's how it splits out in my mind. I don't give a lot to the latter bucket. Energy is kind of immaterial, even if there's some potential there. And I'm just looking at the valuation. I can't reconcile it.
So you currently have a bear position, I'm assuming, by either having just a straight up short or by puts. In your mind, what's the price target at which, or what's the market cap at which you cover and say, okay, I think this is the bottom? I'm really actually just curious.
Yeah, no worries. I mean, I think that the actual value is probably like, I don't know, 80. I mean, something like that. I don't think it's ever going to go that low because I think that there's such a rabid fan base of Tesla as a stock, as a car company. And a lot of these people in this forum are going to go out and like mortgage their home to, YOLO into the stock if it hits 100 again. I mean, we saw that the last time that it dipped down. So I would cover it like 150, partially 140. I'm not like a doom and gloom person that thinks it's going to like $20 or whatever. I think that's kind of ridiculous. I've got some shorter term puts, but I try to be pretty measured about it. I'm not a zealot. I did cover half of a position that I'd opened up almost a year ago and added to about a month ago when there was a lot of hype around the new version of FSD, because I think if you're paying attention to the market, anything with AI hype is something that you want to be pretty careful around.
So you seem to have a pretty reasonable position on this, and you're not looking to get killed in the market. What would have to change in Tesla's execution that would turn you from bearish on the stock performance to bullish?
I mean, at this price point, they would have to have robo-taxis operating somewhere. Like literally. I think the other thing that I've been pretty outspoken about is that the tech is one thing, the regulatory environment is another. Like when the tech is ready, if it were ready completely 100% good to go today, perfect driving everywhere, I just don't know what the actual throughput would be. I don't know that it's as simple as people make it out to be in terms of deploying it, monetizing it, all the above. It's something that's likely going to be illegal in a lot of places, and it's going to be a long slog to get it actually out in the wild, in my mind.
I mean, we can look at any of the markets that Waymo's operating, right? That those are kind of like slam dunk first out the gate markets. But yeah, I mean, you definitely have a point. It's going to be a curve of adoption, in some places being very supportive of it, allowing it to go in very quickly, and then others that are actually trying to ban it and outlaw it. So, yeah, the rollout on that will be more complicated than people are thinking.
Yep, agreed.
Matt, how is FSD doing for you? You've had a couple of tweaks and threads on the software. I know you kind of been more positive lately than about 6 months, a year ago, like most people. Do you see Tesla starting a robotaxi service in some geography, like Grant mentioned, anytime soon?
So I try to be like very measured and realistic about it. I mean, honestly, I've got some empathy for Grant's mindset around this because I think I try to be extremely realistic too, but I'm ending up on the bull side. What I need to see before I really start thinking about robo-taxis as a possibility is like months on end of no interventions. I mean, I had one. Wasn't quite safety critical, but what one intervention where it actually like creeped into the road towards oncoming traffic. It wasn't a problem. Like there was enough space where, even if it just stayed right where it was, people would have braked, and I imagine the Tesla would have found a way out of there. But like you really need those types of instances to be extremely rare, like where the whole fleet might have like one a month or something like that. Maybe, I mean, maybe a little bit higher than that. But so what I'm really trying to track is what's the pace of improvement. And D12 is a huge step change in terms of comfort. Yeah, in terms of like the types of mistakes that it's making, the quantity of mistakes it's making, like everything, every single metric is drastically better. And it like the rate of improvement from 12.1 to 12.2 to 12.3, like that's been extremely encouraging. So I think what I would need to see to have confidence around like a time frame of robotaxi is just like the cadence of improvements to kind of continue at where it is right now. So maybe we get summons, actually smart summon and banish shipped in the next month. We got like more major improvements coming that where there's like the little kind of frequent annoyances that I still have. Those get fixed, and then it's just after that it becomes extremely rare to actually have an intervention, especially a safety critical one. So I don't think they're too far off from that right now, but the proof's going to be in the pudding. So it's very hard to make a forecast until we actually see it, I think.
Matt,
But like if I was forced to, I'd say a couple of years probably.
Matt is absolutely right. So when we evaluate where FSD is at in its path to actually, let's say, hitting L4 autonomy, it's not zero intervention drives are nice. They make nice hype. A 50 miles in a zero intervention drive is fantastic. These things need to be going 50,000 miles without having a crash that would have been prevented by an intervention. And also, if we really want to be honest with ourselves and evaluating where FSD is at, which I think Matt is clearly as an analyst, I think some other people in this group are as well. We can't measure it by its successes. We have to measure it by its failures. Where is it failing? How is it failing? How do we eliminate those failures? And how do we get it down to such a point that the failures that it has are such low probability occurrence events that we are willing to accept the risk? And right now, we still have plenty of failures that are not acceptable risks. And as we watch rate of improvement, although it's fun when it's like, oh, wow, look at how good it took that roundabout. Fantastic. That's great stuff. But it's really about finding those common failures, eliminating all those common failures, and then continuing to go down the list to less and less common failures until we pass a threshold that outperforms human safety standards of driving, but more importantly, will be approved for regulators. So that's what I'm really looking at. I'm watching as the failures decrease and as the types of failures decrease as well.
Thanks, guys. Any questions, comments? Please request to speak. Gary.
Yeah, Matt, had you figured in what of the 17,000 other vehicles would be the Cybertruck, and the Cybertruck revenues would be, I guess, padded with the foundation premium? Because I'm just sort of thinking, just 10,000 deliveries of Cybertruck anytime within this year is going to be $1 billion in revenue right there. And so at 50,000, 5 billion. So just questioning if you knew or guesstimated what the numbers are for Q1.
So for Q1, I think it's not that impactful. Actually, it might be inflating them a little bit. Let me clarify what I mean. Like Elon has said that as Cybertruck is ramping, it's going to be like cash flow negative essentially. And so with any of the ramps we've seen, the initial few quarters are actually a drag on overall profitability. So even though these are $100,000 foundation series vehicles, I'm sure like the revenue impact is going to be very real, but I expect the gross margin on them is going to be like, I don't know, 0 or 5% or something like that. So I don't think it's going to be very material. It is a small number, especially for Q1. I think I was estimating 3,000 units. So my point of view is it's almost immaterial for Q1 and not that material going forward.
Yeah. All right. We have news that 12.3.4 is now rolling out beyond employees. 12.3.4 is now rolling out beyond employees. And to speak on that, Omar, go ahead.
So we saw FSD 12.3.4 roll out to employees last night. It's now going out to customers. I've received it on my Hardware 3 and my Hardware 4 Model S, and it looks like it's shipping to legacy SNX owners for the first time. So good to see them expanding to some new models that haven't tried FSD 12 yet.
That is fantastic news. I don't know if you saw the meme I posted this morning, Omar, like literally an hour ago of the Pablo Escobar meme of legacy SNX owners waiting for that push notification of the download update. Like literally just an hour ago. That's so funny.
Thank you. Yoda, go ahead.
Yeah, I think looking at interventions is going to become the wrong metric to look at. I guess my question for Omar is, when do you think FSD will reach 6 billion miles, or if you prefer 6.9 billion miles?
I don't know. I mean, I think they'll pass.
Yeah.
I think they'll pass 2 billion by the end of the year at least. But we don't have a lot of data on what the long-term rate of miles added ends up being. So we really want to wait until the free trial's over and then see what the rate of miles being added looks like after that. So it's going to take a
Yeah,
couple quarters for us to just figure out how much people are even using it.
yeah. So I believe that that would be a key question to ask for the Q1 on say.com. Again, we could pick any number, but I think how how sharp of a ramp that hockey stick is would be a key question.
Thank you, Yoda. All right, we have 10 minutes to go. 10 minutes to go. Couple of speakers who haven't got the chance to speak yet. Dave, Wolf, go ahead. If you'd like to support the space, the link to Patreon is at the top of your screens. Without patrons, this space would not exist. This space is open, free, and open to everybody. I don't block anybody. We have bulls, bears, freely discussing anything on their mind. I just try to moderate for the fastest pace of learning. That's all. And if you want to support that, the link is at the top. Dave.
And thank you. Hey, so I occasionally drive for Uber, do that, 3 or 4 hours a day. And and so I've been using FSD probably close to 95% of my time. And I would say it is doing quite amazing. The only problems really to me are not those generally from FSD, but from navigation. Sometimes navigation puts the Tesla at intersections where it's going to have a harder time than being one block over. If they could build a few more sparks into the navigation, it would go so much easier, and there would be far fewer issues. But anyway, that was my comment.
Thank you, Dave. Jeff Reimer, go ahead.
Hey, yeah, thanks for calling me up. I appreciate it. I assume everybody can hear me. I had a couple of responses that occurred to me. One, I don't recall who it was that mentioned that in order for Tesla to get out of the doldrums, we needed to have newer, refreshed, or additional models of vehicles. And I wanted to point out that Tesla's refreshing their vehicles every day, every week, every month, continuous upgrades and integrations of new technologies. So how does that factor into that comment or that position? Because it feels to me like maybe the consideration is how does it look on the outside? But as we all know, it's not what's on the outside that's important, it's what's on the inside. So maybe we should consider that. And then the other question or comment that I had was about somebody said, I think it was Eli, mentioned that making a 50-mile drive with no interventions is all well and good, but we need to go 50,000 or 500,000 miles or some very large number. But I would submit that if you have 10,000 50-mile drives with no interventions, you've got 500,000 miles with no interventions. So how does that factor into the calculus? Or are you saying that any one individual needs to drive for 50,000 miles without having an intervention? In that case, 4 years for any one individual in the same car? Is that how that calculates? And I'll exit the stage and listen to my answers.
Thank you.
You wouldn't calculate that on an individual basis. And for exactly your point, you couldn't. It needs to be that the software's efficacy is that it is going 50,000 miles, probably even higher, but that was just an example number before a critical failure occurs. So that would be something that a metric that Tesla would be having to prove and validate from their fleet data. No individual would be required to drive 50,000 miles to prove it. That would be insane.
Machine. Value investor, investor.
Yeah, hi. So one quick question which has been bothering me for some time. So I want to understand when can we have an LLM integration? So a feature like when we can directly talk to the car whenever the car is going wrong. Like, just the previous speaker pointed out that, the navigation is wrong sometimes. And maybe we can correct the car that, tell the car that, you're going in a wrong direction and you have to go in a right direction, and we can
Okay.
guide the car. So,
Okay.
basically
Thank you.
just want to understand. Yeah.
Omar, what do you think?
Sorry, about what? My roommate's kind of like going insane right now, so there's this whole other thing that's happening. But what did he ask?
He asked, when will Tesla have LLMs on the car that you can talk, have a conversation with it, change, if it's going to take it the wrong turn, you can tell it to not take that turn.
Eventually, I think they will have that capability, yeah.
Okay. Grant?
Yeah, just a question for the group. I'm wondering how far off we are from FSD being able to handle the Vegas loop.
I don't think they're going to try that, Grant. Okay. Sounds like a trying to bring machine up, but he's having some connection issues. Paul, go ahead. Paul Tyrell, go ahead. You have to unmute yourself for us to hear you. Paul, you have to unmute yourself for us to hear you. All right, that's not working.
Hello, can you hear me?
What? Yeah, I think people just should skip, can you hear me? If we can't hear you, I'll tell you. If you request to speak multiple times, that's also increased moderation work. And we already have a lot of moderation. I can barely focus on the conversation with everything going on in the replies, in the request to speak, etc. So if I reject your request to speak and you request to speak again, I will kick you off the space. Machine, go ahead.
Yeah, I think it was Jeff asking about the accident rate. I mean, it's going to have to be about 100, 200, or 300,000 miles per accident for the fleet wide, not for any one specific vehicle. So even if for you, it operates flawlessly for the entire life of the vehicle, does not mean actually statistically it'll be safe enough to deploy fleet wide. And that's why you need a lot of vehicles to collect that data to get enough statistical significance in a short period of time to prove it out. And right now we're obviously a few orders of magnitude below that. Yeah, and for the other question, just in terms about it matters more about what's inside than out. I mean, I agree. That's good personality wise. That's also what happens when your mom's mom is with me.
All right. Mark, I saw that coming from a mile away. Hold on, Mark, hold on. Yoda first, go.
Yeah, for everyone who's listening in on the panel, I think we've all long forgotten the time when we first learned how to drive. You were maybe a teenager and you made some mistakes. And what got you to be a better driver? It was just the number of miles you put in. What was that? It was just video going into your brain. And then you practice with actuating the wheel and the pedals. This is exactly what is happening right now with FSD. It is driving on a good day like a teenager. It's making some mistakes. But not before long, it will get improved to be a more seasoned driver. And that is what's happening, I believe.
Mark, go ahead.
Yeah, thank you for this wonderful space. I've been loving FSD 12.3. I had a question. I just had my first intervention while on the space. I was at an intersection and unfortunately it's all completely under construction. So there had to be a traffic cop telling people to stop and go. Interestingly enough, my car stopped as the the officer kind of stopped doing the hand movements, but that could have just been coincidence. But when it was time to go, it obviously didn't respond to that. Just wondering if anybody has an idea when FSD would be capable to actually take those inputs, or if it is now in any capacity. Thank you.
Gary?
Well, I don't think so. There's a controversy with regards to the hand gesture thing. Dirty Tesla had debunked the hand gestures recently, but I think there's been a lot of thought that perhaps that it is within the realm of the language the learning models to uh, to interpret the hand gestures of pedestrians and people out in the streets. So I don't I don't want to discount that the future possibility uh, exists where a police officer can actually uh, uh, direct the FSD. Um, I think that's perfectly in the realm.
Thank you.
Matt, thank you very much for coming today. You should come more often if you can.
Hey, thanks for
Yeah,
having me up, guys. I just got the software update pushed to my Legacy S, so I got some FSD beta testing to go do.
Thank you.
happy to be here, Yaman. Enjoyed the
Yeah.
conversation, so thanks for hosting.
Yeah, thank you very much. And I do want to dig into these financials a little bit more with you. We don't have that many people that look into financials line by line and quarter by quarter. And so, I think that would be a very informative discussion. I wish Machine was here earlier when we were talking about that, but he wasn't. He was probably eating some Popeye's chicken, kind of busy with running around showcasing his abs to the demographic he targets. But that's
Your
okay.
mom.
But yeah, Matt, it would be really good if you can join every now and then. All right, if you'd like to support the space, the Patreon link is at the top of our screens. I will talk to you next time.
Thanks, Yaman.
Thanks. Definitely do it again.